Hi everyone, this is Cindy. I'm going to go over problem 8a in chapter 7, which can be found on page 376. The problem down here in the instruction is telling us that we need to prepare a cash budget for January and February. So that is our ultimate goal, is to have a cash budget report for January and February. One thing that I found helps me out a lot is making sure I completely understand the instructions. It makes it so I can go through completing the report quicker and hopefully eliminate some of the errors that would come along the way. So we're going to take a few minutes and just really go through this, make sure we understand what it's telling us that we need to do, and then we'll go ahead and input it onto the cash budget form. So starting above, or at the beginning, it says Bastille Corporation prepares monthly cash budgets. Here are relevant data from operating budgets for 2017. And then you have 5 accounts listed with their balances for January and February. Going on, it says all sales and purchases are on account. This is very important information. What it's telling us is that all the sales and purchases that were done in January and February were on account. So then we can look at these numbers and go, they might not be the right numbers. And the reason is because we are trying to do a cash budget form. We want to know the actual cash that has come in and out of each month. And sales and purchases doesn't necessarily mean that that's the amount of cash or purchase that came through, since it's on account. So we are going to, for the sake of this presentation, strike out these 4 numbers so we make sure we don't use them. Reading on, it tells us that budgeted collections and disbursement data are given below. So looking under other data, under the items of 1 and 2, it gives us that the collections from customer for January and February are these amounts here that are listed. Also, the payments for purchases are these amounts listed. So these 4 amounts are actually going to replace these 4 amounts, because this is what was actually collected in cash from the customer, and this is actually what was paid for cash for purchases. And so these numbers are the numbers that we need for the cash budget report. These numbers would be for other reports. So it's good that we understand that. If we go on, it says all other expenses are paid in the month it incurred. So it's telling us that the rest of these numbers for these 3 accounts were paid in the month they were incurred. None of them was paid on account, so we don't have to worry about that. Then this last sentence in the paragraph, it says administrative expenses incurred $1,000 of depreciation per month. So what that's saying is that under administration expenses, these amounts have an additional $1,000 that they should not have, because depreciation is not a cash account. It is an allocated account. And so because of that, we're not taking cash out. So we need to reduce both of these accounts by $1,000. So this is how I'm doing it for the presentation. I'm blocking them out so that we will remember not to use those amounts, and then I'm writing in the correct amounts that we should use when we do our report. So there, we've taken care of this paragraph. Looking under other data, we've already taken care of 1 and 2. So number 3, it says other receipts. I highlighted this and put it in green because it's keywords. It's going to tell us it's part of the cash receipts, just like collections from customers is part of cash receipts. So these will increase our cash, because in January we have a notes payable, or excuse me, a notes receivable of $15,000, and in February we collected $4,000 from proceeds of a sale of securities. So that other receipts is our keywords. Just like in item 4 here, we have keywords of other disbursements, and they're also highlighted. So rather than adding to cash receipts, we're going to add them to disbursements. And so it's just keywords. we're going to reduce the amount of cash we have because we paid cash dividends of $1,000 in February. So now we understand all that. The last two sentences included say that the cash balance on January 1 is expected to be $46,000. That's good. We need that to start with. And the last sentence says the company wants to maintain a minimum cash balance of $40,000. So that's also information we're going to need as we complete the report. So now that we understand that, we'll go to the worksheet. And I have created just an outline first to work on the worksheet. Started with a heading by adding the company name at the top, Bastille Corporation. I indicated what report this was. It's a cash budget. And then I indicated the period we're working with, which is for the 2 months ending February 28th, 2017. We're doing the 2 months of January and February. I have a column for each of them so we can see how those cash flows. And then here is the outline of how we're going to get to our ending balance. We will have, of course, a beginning balance. We'll add our cash receipts, get some totals there, add some cash disbursements with some totals, take the difference of the two, add any financing that needs to be added in or taken out, and then we will have our ending cash balance. So now that we have this, let's get started. And we will start with the $46,000, which is the company's balance on January 1st. So we will put that in as our beginning balance in January. And then we've already discussed how the collections from customers and other receipts are our cash receipts. So we'll go ahead and put those in. First one, collections. If I can type. From customers, and we know that in January that was $326,000, and in February that was $378,000. Then we're going to, from here, put in our notes receivable, which was $15,000 in January. But no indication of any receivables, no receivables in February, so we'll just put in 0. We had a sale of securities in February for $4,000. No indication for January, so again we'll put in a 0 for January. After that we can total up both January and February's cash receipts, and then we will find our total available cash for January. And to do this, we add our beginning cash balance to our total cash receipts, and we get $387,000. Then we got to figure out our disbursements. We discussed this already. We start with our purchases that are listed here, and the corrected one is $110,000 for January and $135,000 for February. Going off the accounts listed above, we'll start with salaries and put in those figures of $84,000 and $81,000 each. And then administrative. Expenses, and we'll put in the corrected amount that we figured after taking out the $1,000 depreciation. The last item that's listed with accounts right here is selling expense. So we'll add that. $79,000 for January and $88,000 for February. Now we discussed our other disbursement down here that needed to be added is our dividend. So we're going to add dividends, but there were no dividends in January, only 10,000 in February. So there we have all our cash disbursements, and we can total those up. There, now we have that. Now what we're going to do for January is find the excess, see if we have an excess or deficiency of available cash over disbursements. And to do this, we take our total available cash and subtract our total disbursements from it. And as you can see, we get an excess of $43,000. Now we look back at our instructions, and it says the company wants to maintain a minimum cash balance of $40,000. So at all times they want each month to have a minimum cash balance of $40,000. We can see that our excess of available cash over disbursements is $43,000. So we are above that $40,000. So because of that, we do not need to borrow any money to get to the $40,000. So we're just going to put a 0 in there. And in this instruction, there is no information regarding repayments. So for this problem today, we're not going to work with repayments. So we will put a 0 under repayments for both January and February. Now we can figure out our ending cash balance. And we do that by taking the the excess of available cash, and we add in any borrowings that there might be, and then we would subtract out any repayments that there would be, and that would give us our total. In this case, it's $43,000, meaning we didn't repay back anything and we didn't borrow anything. We just kept our excess that we had based on the receipts and the cash disbursements that we did for the month. This number, the $43,000, also matches with the answer in the book, so we know we're on the right track. Now this is our ending balance for January, and we can pull it forward. In fact, we're supposed to pull it forward and make it the beginning balance for February. So now that we have February's beginning balance, we can do all of the mind blank, figuring for the cash budget for February. So we will go back to figure out our total available cash by adding our beginning balance to our total receipts and getting a figure of $425,000. We will then subtract that amount, $425,000, from the total disbursements for February and get an excess of available cash of $37,000. Now remember, over here it said the company wants to maintain a minimum cash balance of $40,000. $37,000 is under the $40,000, so we don't have enough money in excess to keep our minimum balance. Excuse me, but since we know that our minimum balance has to be $40,000, we will go and add $40,000 down here at the ending balance. Now we just got to figure out what our difference would be, or in other words, how much we have to borrow to get to $40,000. And you can figure this out just by looking at it. But if it was a situation where you can't, what you would do is you would take your ending balance and you would subtract it by the excess that you have, and that would give you the amount that needs to be borrowed in order to get to your minimum cash balance of $40,000. So that is a cash budget. Hopefully this made sense, and I wish you all a great week and good luck on all that you're doing. Take care.